Welcome to Beyond Wealth, Success Unscripted with Matt Calnan. Discover the personal drive, professional journeys, and business strategies that have made a real impact. It's success from the inside out.
Welcome back, everyone. Today we're chatting with Steven Keays. Steven is the founder and CEO of Le Group KPO LLC, helping bring investors and project owners together to get capital projects built. Welcome to the show today, Steven. Maybe just start off, can you tell us a little bit about more about yourself and what you're doing?
Yes, good morning, and thank you for having me on. I'm from Calgary, and I've been in Calgary for 30 years now. I got into project financing by happenstance about 3 years ago, something that I was pursuing on behalf of other clients. And essentially, I've been in project management for 40 years. So I've been around projects, large capital projects. Being in Calgary, oil and gas has been a major portion of that effort on my part. Yeah. And I've been project manager, project director, and I've worked both sides, both the PCM side, the owner side of a project. So I'm very familiar and comfortable with large projects. The bigger the number, the better for me. I like big numbers.
Yeah.
And so I understand the process of projects, and was never really familiar with the financing part of it. And as I said, I fell into it by chance through a project a client I was chasing after in Mexico 3 years ago. And basically I was told we'll go forward with a project and the engineering behind it once we secure the financing. That's when I clued in, well, maybe I can help them find financing in order to get the engineering work. This was 3 years ago.
Yeah.
And it rapidly became, well, why bother with the engineering? I mean, I think the fun part for me has become the financing. And we've looked at over 200 projects over the last 2 years, not really 3, but 2. And it's all over the world. We deal principally in what I call major capital projects, usually $100 million and more. We can deal with 50 million, 25, and we're limited by the investor network that we deal with, who are interested in big numbers, and that's why we have our own limits there. So we focus mainly in infrastructure, energy, green energy. Hydrogen and ammonia have come on board online recently. Lots of mining projects, lots of real estate projects, typically large-scale real estate, such as hotels, resorts, large-scale residential development, commercial buildings, hospitals, shopping centers. We've done some transportation projects as well, we looked at transportation projects. We're very active almost everywhere on the planet. The projects come in. We're not that active in North America, funny enough, not by design, but just by hand.
Yeah, that's interesting. Yeah.
Organically have grown this way. Very little action in Canada. For fairly obvious reasons, Canada has become a pariah on the world stage when it comes to investment. We're talking about big money. Nobody's going to put $1 billion project together in Canada. It is that simple.
Yeah.
I've had clients told me that it's easier to buy an army to protect an asset in Venezuela than to put up with the ordeal of going through the regulatory environmental process in Canada.
The red tape and bureaucracy
it's just nothing's getting done. Nothing gets done in Canada.
Yeah.
Real projects, unless you're in Quebec, but that's a different story. So almost nothing in Canada, some in the US, quite active in Mexico. We've done stuff in Brazil, Costa Rica, Panama, a little bit in the Caribbean. We're quite active in certain parts of Africa. Not all of it, because Africa is a very difficult region. I mean, it's a giant continent. You can't speak of Africa as a solid block. Every country is different, but they have excessive challenges across the board. So there's a few countries that stand out. Kenya is one, Tanzania is one. They're kind of light, and they're sort of the East Africa part. Mozambique used to be good until 2 years ago when I had that coup. It's always it can be a crapshoot in Africa. I've tried to do some big deals in Congo, the DRC, that didn't go well. One ended up in a murder of a minister.
Oh
So
no.
yeah, sometimes it feels like dealing in Africa can become like a soap opera,
Yeah.
or an adventure like a Jason Bourne on the financial side. It's so, but if you can nail a good project and all the places are in place, all the things are in place, it can be exceedingly lucrative from an investment standpoint.
Mm. Yeah.
But it's a big if. We've looked at projects in Africa, a little bit in the Middle East. We're starting to move eastward now and towards what I call the Southeast Asia, what we used to call the tigers there. There's Indonesia, Malaysia, Thailand, Vietnam, Singapore, which is basically the financial hub of the whole region. Those are Philippines is another one. Those are very dynamic economies, which in North America we never think of. It's just the East is something that rarely comes up on the radar unless China is discussed in the news.
You're right.
But
Yeah.
Southeast Asia is not perceived as I think a lot of people don't think of it as a great economic region to invest and develop projects. But it's exceedingly dynamic. And the beauty of the region is that when a country or in the region, a company wants to get something done, they get it done.
Right. Yeah. A lot less red tape, right?
There's always red tape. There's regulatory process, but if a government believes that a project is in their interest or in the interest of the nation or even the community, it will get done.
Yeah.
So that is a fundamental difference between North America and Europe. I mean, Europe is where we have almost nothing in Europe because again, the red tape is so enormous.
Yeah.
So difficult. And frankly, anti-development in many of the Western, what we used to call the Western Europe.
Yeah.
That it's unless you're within Europe, it's a hard place to do business with. It's just difficult. So we span the globe. I do like emerging economies personally because there's a lot more development required to bring them up. There's more investment there.
Yeah.
No, these are economies people want to get up with keep up with the rest of the world and develop their economies. Africa is very dynamic in that sense. They can't get their politics together, which is unfortunate. But if they did that, I mean, Congo alone has got more mineral and natural resources than any other country on the planet. It's insane.
Oh, wow.
The wealth in the DRC, if it could be tapped the way you could tap it in North America, is insane. But politics stay in the way. I like Latin America, not all of it, but there's a lot of activities there. Again, Brazil is a good place. Argentina is finally coming around with that new president. Financing is tied to politics. And I should have mentioned, it's always private finance. We don't deal with banks. We don't deal with institutions. I've dealt with the World Bank a little bit and the Inter-America Development Bank and even the Caribbean Development Banks. But these organizations are ponderous. They're and they're very bureaucratic. So it's very difficult. The timelines are not reasonable for most projects. It's just willing to go there, but the timeline to get anything approved is just crazy.
You can't get anything done again.
Yeah. So we deal with mainly family offices on the investment side. It's family offices, private equity companies, a tiny bit of venture capital, because we're not really in a startup world. We've been asked to get involved, so startup innovation, which is something I've done the last 10 years or so. But VC the startup world is a very different game than projects. The economics are different, the modeling is different, the promises are different. Projects are like an annuity. You invest in it on the data that's supposed to be done. You know you're going to start making money right away. And you can start, it's a bankable opportunity. Startups are it's a crapshoot. Here's my $1 million. I'm hoping to make at least 5 times the amount within the next 3 to 5 years. That's the VC game. Now 5x over 3 to 5 years, 10x over 5 to 7. Yeah. And there's no guarantees. So different game. So in most of our family offices, they're sprinkled across the world, just like just like the projects. Some in the US, we have none in Canada. I've yet to come across a family office in Canada I can work with, and it's unfortunate because I'm looking all the time, but so far hasn't come through. Some in the US, some in Mexico, some in Brazil. I've got several of them in the Middle East, mainly Dubai, Abu Dhabi. Oman is becoming somewhat of a niche investment sector from a private standpoint, which is almost on nobody's radar. A bit of it, we do have some investors in Australia and New Zealand, mostly interested in mining projects, but especially Australia, and some in Singapore, a few in Indonesia, and I'm missing one here. That's okay. It's so they're scattered around the world. They do, every family office do things differently, and it's debt financing. It's typically not
on the
equity
equity
financing.
side. Yeah. Which is
Uh,
fairly typical for most family offices, right?
well, no, I wouldn't say that. I mean, a lot of if family off what I should no, I wouldn't generalize this. Some family offices, if they're in real estate, they have they usually have an interest in the equity participation.
Sure. Yeah.
But if they're financing big projects like infrastructure projects, they will not put any equity, but they're willing to, if you need $1 billion, there are some family offices without syndication. So a single party will come to the table and put the money down and loan the money.
Sorry, Steve, would you mind just maybe explaining at a high level what a family office is for anybody that might not have that experience?
The exceedingly well class. We're not talking about the 1%. People who make $100 million. Now, families who, well, I say $100 million is a good number to work with. It's not a official baseline, I think, but people who have hundreds of millions of dollars or billions of dollars, I would say very often will form essentially they run the business or their businesses, and then some of the money found by the family is placed in a separate corporate structure that is fully corporate. It's not done in a basement environment. It's a fully incorporated operation, but it is called a family office. I think most people are familiar with the Bill Gates Foundation. Well, it used to be Bill and Melinda Gates, but
yes, some things have changed.
Foundations and family offices, basically foundations, if they're held by a person, is basically the same thing. It's their money, the family's money that's intended to do things other than the main business, typically. And more importantly, it's designed to preserve the wealth, if not multiply, but at least preserve it across the generations. That is, I would say, the dominant theme of family offices is they want to make sure that their family across, once they die, the money's there and it's not squandered. Family offices are always professionally managed. So it's not the children and the babies who play with the money and go see what you can do with it. It is good family offices are ran like an investment bank or a financial investment company with a lot of structure, a lot of discipline, far more than even investment banking, I would say, because it's their money, right? They have a stake in this. It's their skin in the game. So they're very, very meticulous when it comes to assessing a project, and they're not interested in gambling. Some of them will get into philanthropy. I mean, that's part of usually foundations are set up with a philanthropic aspect. Quite often. Family offices may or may not. Some are interested in making an impact in the world. Some are interested in improving the world. There's a lot of family offices that invest in biomedical research now. Health, biomedical research. Now, there's also a sense of a lot of family offices obviously are ran or owned by older folks who are coming to the end of their careers. And because they're old age, they want to live longer. So health.
So they'll fund that.
It's a fact that who wants to die? If you're rich, who wants to die young, right? It's just, So there's definitely a grand motivation to see what they can do to help improve the system or the medicine. Some of them are still in there just for making more money. So the motivations are different. You can't generalize. Each one of them has their own interest, their own focus, and their own ways of financing a deal. So again, there's no, I mean, the ways of doing private placement, no, it's not placement, private financing, almost like private banking, is exceedingly diversified across the board.
Yeah.
So I mean, some will do interest rates a lot below the prime, and they're able to do this a lot. Some of them will do trade desk approach. So they leverage some seed capital up front, multiply it. I mean, they can be exceedingly creative and far more flexible than banks.
Yeah. I think that's a big key, is that they might be they might do a lot of due diligence on a project, but they're very flexible.
They do more due diligence than most, I would think, because they're again, it's their money. Yeah. And when it's your money, it's a different thing than managing other people's money, right? Yeah. So they will do things across a variety of approaches that can be exceedingly beneficial to projects, especially projects that don't have the usual collateral. If you go to a bank, you need collateral, you need assets, you need hard assets, and a lot of or potentially liquid assets to bankroll a project. If you go through a bank or some kind of traditional or institution, that's challenging for most projects, because most people they'll spend a ton of money up front doing the feasibility studies and getting the environmental permits, so they get to a stage where the project has been proven to be economically valid. That's the feasibility study, or there's a business case to it if they want to build a manufacturing shop, for example. But then that's maybe 5% of the total cost of a project, right? At the front end. They still need to come up 85 to 90% of the actual money. Mm-hmm. And unfortunately, most projects, they spend all the money they have to get it as far as they can. And all pretty well run out, and then go search for money. And most of them are, as I said, don't have the traditional collateral or the liquidity to even put up 10% up front. I mean, I have some investors who will take 2% cash down. They'll do something with it. Some others will put 10%. Some of them will do 20%. They'll do 100% financing, however, and that's another advantage. And the terms can be over 10, 15, 20 years, depending on the dollar value. Of course, if you're going to borrow $300 million, you're going to do this over 15, 20 years. And there's some benefits. A lot of this, most of them will acknowledge that during construction, you can't pay back anything. So there's a forgiveness period that can range from 12 to 36 months. So the first 12 to 36 months of a project that's fully financed, you only pay back the interest rate. You're not paying the principal or a portion of it. So because at the end of the day, these projects, it's to the benefit and the interest of the investor to see it through.
Of course, everybody wants all those projects to succeed.
Because the project itself is never a collateral, or even land. Land is usually not taken as a collateral unless it's worth at least 125% the value of the loan that you're asking for. Okay, which is never the case. And the reason the project is never taken as a loan, like a mortgage, right, is that if you start building, say you build an apartment, or try to build an apartment building, and 3/4 of the way through, you stop, you run out of money. And it stands. I mean, we've all seen these buildings that sit there. That is not a liquid asset. It's a giant liability, because most companies will never buy this and try to finish it. That rarely happens. So very often they'll buy it, trash it down, and try to build something on top of it, or it sits there for years and you pay taxes. It's a liability. An unfinished project is not an asset. It's a liability. It's a giant liability. So there's no interest in risking money if there's no high certainty that you'll finish it. So so that's why, you know, these family offices, they're not there to, they're not going to throw money at something and hope it's going to fail and then take it over. That's not the
they don't
business.
want to do that. Yeah.
No.
Stephen,
Go ahead.
I mean, obviously, like right now in the market, we're in pretty uncertain times, right? Whether it's, and especially if you're dealing globally, I mean, every country's kind of got its different scopes right now. But whether it's interest rates, you know, the potential real estate crashes, things like that. What are these organizations and you kind of sitting in the middle of that? What's happening to help reduce the risk of those that uncertainty?
The easy answer is you cannot. The answer, because we live in very interesting times. These are global. I mean, where the planet is laboring. There's a huge amount of let's say turmoil and upheaval, economic upheaval, certainly political upheaval, economic dislocations. There's a giant power game being played right now between China and the U.S.
Yeah.
And that taints everything. All right, it maybe not taints, but you cannot ignore the and it is a fight. It's not a war. I don't like to use the word war, but it's definitely a fight for dominance.
Yeah.
The Americans, U.S. wants to preserve their dominance, which is slipping. Chinese are trying to impose theirs, which will not happen because their money is not tradable. It's not, the yuan will never be a so-called reserve currency because it's not freely traded for a host of reasons. But you cannot ignore China. And China is apolitical when they go into a country. They don't try to impose their views on things. China is a pure capitalist. They're the Ferengis. If you're into Star Trek, China acts as a Ferengi world. As long as there may need to be made somewhere for them, they'll go and they don't care what happens internally, domestically. We don't care. As long as we make our money, we don't. This stands in opposition to what certainly the West has been trying to do nominally over the last 60 years. The US dollar is well, I don't think we're going to see in our lifetime its reserve status go away. I mean, there's too much money in the system, transactions. That's, I mean, you and I don't see it, right? It's just, we have a little bank account somewhere. And if you have $1 million in your account, if you think you have $1 million in your little bank account, you think, oh, that's a lot of money.
Yeah,
well,
nothing.
Now, every day there's maybe not trillions, but I don't know how many $100 billion of
billions and billions of billions
wire transactions back and forth. And it's always mostly through the SWIFT system. Yeah. Which is, you know, that's how you transfer money across banks to make it. And that system is still dominated by the US dollar. The euros was trying to muscle in for the last 20 years. They've lost steam. I don't think it's going to happen. The Chinese are really trying hard to, they've pegged their yuan to the gold standard. And they claim that you can trade yuan for gold, vice versa. I don't know how true that is.
Right.
But they're trying to really create an economic bloc, the so-called BRICS. But economically, the BRICS it's a basket case. And China, by the way, is struggling. There's some huge problems internally. They're inverting their population pyramids. They've hit peak population about years ago. And they're heading, and there's nothing they can do to reverse this. I mean, the one-child policy that ran on for 40 years? Yeah. Well, these,
now they're seeing the effects of that.
Populations are measured in generation. Population problems. And the Chinese cannot import immigrants the way the West can if it wants, because who wants to go to China? So that's already creating enormous financial difficulties and economic difficulties. They're losing workers. So the workers that are left are having an increased power of increased leverage and increasing their wages, but it's increasing the cost of production in China. Vietnam is a net beneficiary of what's happening in China, and as a result. So these are gigantic forces that are at play that all you can do from an investment standpoint is, I mean, you got to pick the regions where you're comfortable dealing with, right? And that you're going to have issues and problems everywhere. You just need to pick your battles. Where is it less likely to hurt? Or how much tolerance do I have? And Canada is a bad place. It's so revolting with what has happened. And it's purely political, what has happened, the decline of Canada. It's seen as a pariah. Canadians don't see this because we're very introvert, right? In fact, Americans are very introvert. Americans usually do not see outside the world. They still think that the world evolves around the U.S. and they have a hard time understanding the world is splitting, between the West, the traditional West, and Asia. Asia is moving in its own direction. Not because Japan is in there, and there's not just China in Asia. There's China, there's Japan is used, Korea is huge. I mean, South Korea. Taiwan dominates the chip world, and we cannot minimize the impact of Taiwan when it comes to high-end chips. If Taiwan was blown up today, the world would come to it crashing in just because
they drive a lot of stuff, right? Yeah.
There's a great book that I would encourage people to read. It's called The Chip Wars. Very simple book. You can read this in 3 days. It was published very recently. It explains how the US, of course, invented the chips, how Silicon Valley came to be, why is it still the potent power it is, but how it migrated to Taiwan, which is not an obvious thing. And what is the NVIDIA now? They just did the $1 trillion valuation.
Yeah, I saw that. Yeah.
Right? And their NVIDIA is going to be the biggest player, I think, coming up.
Yeah.
So going back to minimize the risk, you need to pick, I mean, the projects at the end of the day have to be bankable. And it doesn't really, well, within reason, it doesn't matter where they get built.
Sure.
Of course, you don't go to Venezuela, you don't go to North Korea, you don't go to Syria. In fact, you wouldn't go to China either if you want to retain equity or ownership of the project. You know, there's these obvious places you don't want to touch. But if somebody came up and said, we want to build a wastewater plant in Trinidad and Tobago, who's heard of Trinidad and Tobago? It's one Caribbean island that doesn't make ground on tourism. It's a great place to do business. Now, assuming the business case is made. I mean, in Guyana, it's north of Brazil there, they discovered oil and now Venezuela is acting up, saying we're going to come in and we want the territory. But there's a lot of these little countries that are always under the radar. They're small. You can't go in there and expect to make billion-dollar investment projects and make billion-dollar revenues. But if you do the right things, you can invest in projects, complete them, and start generating ROIs that are superior to you would get in North America. Mm-hmm. So it's all about the project and the location where it's based. And of course, there's a whole lot of things that goes around what's a bankable project. I got some PowerPoints that I can share on what makes it bankable. The idea of a project is useless. The vision is useless. I call it the penniless vision is a dead end, it's stillborn. But if the economics of a project makes sense on paper today, realistically makes sense, then it's a more durable investment, and I would say safer investment than playing in a startup game. Far more. Yeah. And usually it's a short time frame, 1 to 2 years. Usually it's built, and you know you're generating revenues then.
Yeah.
But that's how you manage risk. It's you pick the project, and then make sure that it's the right one, it's a good one, and then you will see it through.
Yeah. Well, Steven, I think we're going to have you back for a part 2 because it's pretty fascinating. I think we could dive into a lot further. For now, for somebody that wanted to maybe reach out or connect or find a little bit more about what you guys are doing, where would they find that?
Well, the website is kpogroup.io.
Okay.
And then my email is skeys@kpogroup.io. I'm also on LinkedIn. I'm on WhatsApp. Steven Keays, and I'm on Telegram as well. But any of these platforms, anybody can reach out. Yeah, and I'd be happy to speak to anybody who's looking for money, essentially.
Yeah.
Or in many cases, if they have an idea of a project but don't quite know how to get this done, we also help
structure
on what I call project consulting. We can actually execute an entire project for a client if they so desire.
Yeah. Okay. No, that's great. We appreciate having you on the show today. And again, we'll have to do a follow-up part 2 in the next little while. And good
I'd
luck
be happy to.
moving forward here.
You tell me which part you want to discuss and I'll prepare something.
Absolutely. Sounds good. Thanks very much, Steven.
Okay. Bye-bye.
Bye-bye.
You've been listening to Beyond Wealth, Success Unscripted with Matt Calnan. Want to be our next guest? Visit beyondwealthpodcast.ca/guest. See you on the next episode.